Shares of Canadian packaging company Cascades are trading sharply higher since last Friday, and the stock is keeping a stable momentum this week. What's been going on with the company and the sectors? Let's put that question to Sean Steuart, analyst at TD Cowen. It's good to have you join us. Thanks for taking the time.
Thanks very much for having me.
Okay, so you upgraded your analysis of Cascades to a buy just recently. Why did you do that?
Two basic factors, both of which we expect are going to support higher earnings into 2026. The first is that the containerboard industry in North America, we're seeing a significant shift in supply management. But 3.3 million tons of net capacity is permanently exiting the North American industry this year. Much of that's back-end weighted towards the end of this year. That equates to more than 7% of overall industry supply closing. Even with flat corrugated box demand, that would translate into a 2026 industry operating rate of 96%, up from about 92% this year. We expect that will support price increase efforts early next year. The other company-specific factor for Cascades is their Bear Island asset, and this is an old idled newsprint mill that was converted to lightweight containerboard by the company. It started production in 2023. That ramp up has been slower than expected to this point. It's weighed on overall results, but momentum did improve in the second quarter. The operating rate for Bear Island was up to above 70%. We expect further gains in the third quarter and going forward. That's going to translate into lower unit costs, higher contributions from that asset, and that's important. Bear Island, once it's fully ramped up, we expect will comprise about 20% of Cascades' overall earnings base. So a successful ramp up for that asset is very important for this company.
Before I get into broader speak about the actual sector in general, just going back to Cascades, you also mentioned capacity closures. Can you talk a little bit about that?
Yeah, so significant change. And this is partly Cascades. They've shut a couple of machines, but bigger players in the containerboard industry, IP, Smurfit Westrock, and others, as I said, they're closing about 7% of industry supply this year. And a lot of that is happening right now. We expect that's going to substantially tighten this market into early 2026 and support higher prices.
Okay, you talked about the containerboard industry as a whole seeing a significant shift right now. I see the positives of this one company, but what are some of the challenges that the sector faces going forward?
Certainly demand headwinds have been pronounced, and a lot of that is around, I'd say, broader macroeconomic risk associated with U.S. trade policy. We expect that corrugated box shipments in the U.S. Will be down about 2.5% this year. That follows weak results in 2024 as well. I'd say demand is the bigger risk. What our expectation is, though, is that supply this year is going to come out at a much faster rate than demand is falling, supporting higher operating rates and eventually better prices into early 2026.
When we're looking at the sector as a whole, are there other companies, stocks you like?
Within the packaging space, and this would be more of a specialty packaging play, Transcontinental, we think is an undervalued company, very strong free cash flow profile, interesting company. They're transitioning from their legacy printing business to more of a weighting towards specialty packaging. That's been a gradual transition. Their legacy printing business still continues to generate strong free cash flow, even as the top line has structural headwinds. We think that company is undervalued. In the U.S., Clearwater Paper, they are a paperboard producer, more of a specialty grade than containerboard. I think there's an interesting transition underway for that company as well. We would have Transcontinental and Cascades ranked ahead of Clearwater Paper in our pecking order.
You mentioned tariffs being one of the challenges for these companies. Canadian versus American companies in the packaging sector, are the ones in the U.S. maybe less likely to see those challenges than the Canadian companies?
I'd say it's weighed on demand overall and how that's translated into box shipments. No direct exposure to tariffs for Cascades in our coverage. About 2/3 of their assets are based in Canada. About half their sales are to the States. So to the extent that tariffs were to be applied to packaging, there would be some exposure for Cascades. But to this point, tariffs and duties from the U.S. supply to Canadian imports has been limited to softwood lumber, timber for the Section 232 tariffs, and furniture for Canadian. So for Canadian supply going into the U.S. So no real exposure on the packaging side at this point. I wouldn't qualify Cascades as exposed directly on that front at all.
Okay, good to know. Sean Steuart, analyst at TD Cowen. Really appreciate your time. Thanks for joining us.